Thank you for remaining with us. Welcome back, ladies and gentlemen. Thank you for remaining with us. You're watching Smart 24, and my name is Anthony. You're watching Financial Markets. We are looking at the stock market. And the stock market, for starters, is just a place where people go to trade equities or shares. And there are two kinds of markets, the primary market and the secondary market. The primary market, we look at the very first time a company decides to list on the exchange. That is, you come, as MTN Uganda, as we witnessed last year in December 2021. For the very first time, MTN declared the fact that they were interested in getting money from the public or raising capital from the public. Now, they floated shares for the very first time. And they don't float the entire company. They float a certain percentage, maybe 20%, maybe 10%, whatsoever they might wish. And they go to the exchange and request to be listed on the exchange. For example, the Uganda Securities Exchange. Now, when they get listed onto the Uganda Securities Exchange, they will be doing what they call the IP, initial public offer, when the company declares interest in raising capital from the general public. When this happens, people, the public, normal individuals, institutions, and so on, are able to go and buy shares at the price that is stipulated, of course, by the company. And when people buy shares from this company, and the shares are all, the shares that were, of course, offered by the public, by the company to the public, are exhausted, the company stops, of course, the initial public offer, and we go on to the secondary market. On the secondary market, we see traders on the market who are involving two parties. One, the people who bought in the initial public offer, and then the people who want to buy from those people who have already bought the shares. So in the secondary market, then we have interaction between the people of the primary buyers and the secondary buyers who want to purchase shares from people who already own these shares. And in this way, trading works on forces of demand. Certain stock, definitely the higher the price will go. And the lower the demand, the lower the price probably that we shall see. The higher the supply, the lower the price. And the lower the supply, the higher the price. That's how it works. And definitely these two are, the buyers and the sellers of the stocks meet via a single intermediate known as the stock broker. Now, this stock broker stands in the middle of one, the exchange, two, the buyers, and also he is mandated, of course, by the regulator who is now in Uganda, the Capital Markets Authority of Uganda. And this intermediate or the broker is responsible to unite the buyers and sellers depending on who wants what. Because the stockbroker is approached by both the buyer and the seller, he knows exactly who wants a stock at a given price and who is ready or willing to give up a stock at the same price. And all he does is put them together and they crack what they call. And this is the way the secondary market operates, as simple as that. Now, how people gain from these stocks, once again, is quite simple. When I buy stocks at a lower price and sell them at a higher price, maybe probably when the company has gained value or when there's a lot of demand for a certain stock, I sell at a higher price and I make a little of it from that price that I've actually been able to sell. Now that is called the capital gain, meaning you're gaining through buying at a low price and selling at a high price. That is just simple as that, capital gain. Another way is through the dividends that are issued by the listed companies or equities. Now, some of these listed equities make money and they make profits, and when they make profits, they are of course pushed to give back to their shareholders a certain portion of that profit they have made. Because look at this, you have raised capital from the public. These people have trusted you with their money for you to grow and build more, build more facilities, be able to produce more, be able to employ more people, be able to, maybe employ more technology and, create more jobs and so on. So they expect that your revenue has probably gone up, and so have the profits of the company. And at the end of the financial year, when you declare a company, that is a company listed on the exchange, should always be transparent. You have to declare your books and put them, and you put your books up there, and people will see that you made a certain profit. Definitely they will anticipate that you will give back some of this profit to them, as a sign of gratitude, yes, for baby raising your capital. When the company makes profits, it gets a certain portion of that and gives it back to the shareholders, a certain percentage of that profit. And that is called a dividend, and it's calculated in terms of dividends per share, given the number of shares you have in a certain company. Taking an example, for example, MTN declared a 0.706 for every share, meaning if I had 1 million shares, I had a dividend of about 4.7 million. If I had 100,000, I would get about 400,000 shares. And dividend is, of course, declared by the company, but it has to be approved by the shareholders, their annual general meeting. And one of the sole responsibilities of a shareholder is to actually attend the annual general meeting to approve some of these dividends, and also approve the results, the financial results, listen company on their financial results or financial reports as of the previous year of work. And then when they approve that dividend, it's of course issued at a certain date, and on that date you buy books, you buy shares. Before that date, you'll be able to gain dividend. Past that date, you won't be able to get the dividend. This, of course, is how most people would want to gain from the stock market, in a way that investment somewhere, and it's bringing in income without your input. Without you going to Stanbic Bank to work every day, you have a dividend declared, and you have that portion every time the company declares one. Yes, that is extra income coming in from all corners. And for example, you buy shares in a New Vision, you don't have to go to New Vision to work. You just have to wait, make the company, you're following up with the books, and when they make a profit, definitely they will be giving it back to you. And that's one way of gaining. There's two ways we have already mentioned: capital gain and the dividend. Now, like yesterday, we had a broker here. He also talked about the bonus issue. Now, what is a bonus issue? Now, a bonus issue is where the company is able to issue shares at either a subsidized price, or shares that are absolutely free. Actually, the ones that are subsidized, it's usually called a rights issue. Yeah, you're able to buy, for example, stock in New National Insurance Corporation. From instead of 6, you buy at 5. You're buying stocks at a lower price, or you're able to actually get free shares. Like for National Insurance Corporation declared that it will give a bonus issue this year. So a company can do either. It can either issue the dividend, or actually issue the bonus issue, meaning they give you bonus shares without a cost. Yes, and your stock value increases just like that. And so this also is subject to approval by the shareholders, and the company has to, of course, call for an annual general meeting, like National Insurance Corporation did, and the shareholders have to approve this kind of bonus issue. And when they do, definitely every shareholder in the company is able to access this bonus issue, and they will also gain from that. The rights issue, you receive some bonuses, but also you receive some shares at a subsidized price. They almost work the same way, but this is some of the ways you can actually gain from these stock markets. Another way, probably for the stocks that are, listed on the exchange, they will be able to gain, through reputation. Companies that are listed all over the world are highly reputable companies because people have the view that these are transparent companies. By the time people can trust them with the money to expand and grow on the capital market, they are companies that have gone through scrutiny and are promising. Therefore, you gain a reputation. You also gain favors. There are quite many other advantages that we could mention all day, but those are some of the ways I just wanted to mention that probably you can gain from the stock market. And now, talking about stock markets, let's move to Nairobi and the Nairobi Stock Exchange. And now, the Nairobi Stock Exchange definitely is the oldest stock exchange in East Africa, but also the largest and the principal stock in East Africa, with over 65 listed equities. And yesterday, we saw about 24 gainers on the market, and as well, we saw about 19 losers on the market. 24 gainers, 13 losers, matter of fact, on the market, yes. And the Nairobi Stock Exchange operates, like I said, under the jurisdiction of the Capital Markets Authority of Kenya there, and they are mandated to regulate and promote the growth of the capital market in Nairobi. They have indices, various indices, and their benchmark index is the Nairobi Stock Exchange All Share Index, which monitors or tracks the performance of all the equities that are listed on the exchange. But in 2008, of course, in order to provide investors with a comprehensive measure of the performance of the market, the All Share Index is that time was, of course, initiated, and the market capitalization, it was a market capitalization weighted index with the best value of 100 as of January 20, comprising of all the listed equities and securities as well. Effectively, it's the benchmark index for the Nairobi Stock Exchange. And in 2011, together with the FTSE International, the Nairobi Stock Exchange introduced the FTSE NSE index, the Kenya 15 and also the Kenya 25 indices that of course are designed for the creation of index funds and derivative products, and as a performance benchmarks while ensuring investability in the market. Well, the Nairobi Stock Exchange 25 index also monitors the top 25 indices, while the Nairobi Stock Exchange 20 monitors the top 20 companies. Looking at the Nairobi All Share Stock Exchange Index, it yesterday went up by about 7 points. That is a 0.65% appreciation in as of yesterday on the market. And looking now, it's way above 100 points at about 120, 125 points. And looking about 2-3 months ago, it was actually above the 150 mark, but recently the stocks went down, and the prices, the points for the Nairobi Stock Exchange All Share Index as well went down a little bit. Amongst the gainers, we had cable, East African cables. We also had Nairobi Stock Exchange. Now, yes, the Nairobi Stock Exchange demutualized and was able to become a separate entity, a public company, and offered an initial public offer where it raised over 600 million Kenyan shillings and was able to list on the exchange. That was in the year 2014. For the very first time, the exchange decided to demutualize and get listed on its own exchange and raised about 627 million Kenyan shillings as of that date in 2014. And there are advantages as well, quite many to this, because now the company becomes a profit company for profit, not for non-profit as before demutualizing on the market. The Nairobi Stock Exchange market, just like the Ugandan market somehow, is divided into 4 segments. The main investment segment, that is for the big, large companies. And then we have the alternate stock, the alternate market segment for the medium-sized companies. Then we fixed income segment for fixed incomes. We're talking the treasury bonds and the treasury bills. And then we also have what we call the growth enterprise market segment. That was 2013 to give small enterprises an opportunity to access the capital there. The first 2, of course, are for the big and medium companies. The last is for the small companies, and the fixed income for the treasury bonds and bills. All these are market segments that are on the Nairobi Stock Exchange. Looking at the market yesterday, Absa Bank of Kenya, a public limited company, was one of the companies that moved on the market with a volume of about 6,500 shares at 10.9 Kenyan shillings. And Bamburi Cement was another mover, but also loser on the market, moving the market by trading about 3,100 shares and 34.25 Kenyan shillings being the price. It did that with a loss of about 0.75. That was Bamburi Cement. Another mover on the market was British American Tobacco, Kenya, at exactly 415 Kenyan shillings. Traded about a volume of 1,600 shares yesterday. Britam Holdings was a loser on the market and a mover as well. He moved the market with a volume traded of about 6,000 shares, and he traded by the end of the day at about 5.5 Kenyan shillings. And looking down to what he lost about 0.02 Kenyan shillings as well. And then East African Cables was a gainer, as mentioned. He moved the market with 100 shares volume traded and a gain of about 0.06 Kenyan shillings to end the market with about a price of 1.04 Kenyan shillings. Another mover on the market was actually CIC Insurance Company, who actually moved the market by about 10,700 shares that were traded at 1.99 Kenyan shillings. Other people who actually moved the market were Centum Investment. Centum Investment Company went up by 0.1 Kenyan, and 10.3 is the price at which they are trading. Now, if you monitor the pricings of some of the cross-listed equities from Nairobi, you just need simply to convert a conversion factor. Because look at Centum. Centum Investment Company trading at 10.3. When you get that and multiply by the currency, exchange rate from the Kenyan shillings to the Ugandan shillings, you will get still about 311 Ugandan shillings, which is the price at which Centum Investment Company is trading in Uganda. But you will not see very many people trading as much on Centum in Uganda. They would rather move to the Kenyan market and trade from there, probably because of some, logistical issues here and there, transactional fees and so on. But it's almost the same thing. When you invest in a cross-listed company, it's almost as good as investing in it at home on their usual exchange. Just a few changes here and there in currency, in terms of transactional fees and means of transaction, but not much of a change when it comes to how you can trade on the market. It's actually the same. Down to East African breweries. East African breweries gained on the market yesterday at live, trading at ending the trading day with about 139.5 Kenyan cents each share, and traded a volume of about 600. Equity Group Holdings traded a huge number of shares, about 2,098,100, each at 45 Kenyan cents. And he also had an inch up of the stock to about 0.5 Kenyan shillings, by 85 to about 45 Kenyan shillings a day. Then Ever Ready didn't have any volumes, 0.73, which was the price at which he actually traded yesterday. Then Stanley Fahari Income was among the losers at 0.06 loss, gaining a loss to about a price of 6.5, and he traded about 1,000. There are quite many companies on the exchange, over 65 of them, and we may not be able to mention each and every company, but we can look at the trading summary to exactly how the market performed on the Nairobi Stock Exchange. By the end of this trading session yesterday, the Nairobi Stock Exchange had a total of about 16,211,500 shares in 1,427 deals, corresponding to a market value of over 546 million 31,000 shares. So we have over 1,000 deals and over about 16 million shares and a market value of 546 million Kenyan shillings worth of shares were traded yesterday, which is very important to compare previous days. Tuesday, that is Tuesday 5th of July, the data shows about 32% decline in volume, about 17% decline in turnover, and a 14% improvement in the deals that were made. The current market capitalization for the Nairobi Stock Exchange is actually 2.07 trillion Kenyan shillings. And in aggregate, 46 listed equities participated in trading, and ending with 24 gainers and 19 losers. The gainers were led by Trans-Century Limited with 10% price appreciation, 1.1 Kenyan shillings, followed by Nairobi Business Ventures, who closed at 7.04% rise, and Liberty Kenya Holdings followed at 6% rise, and then Uchumi Supermarket at 5.26% rise. On the losing side, Olympia Capital Holdings came out last with an end of day price depreciation of 10% at exactly 2.25 Kenyan shillings per share. And then he was followed by Kakuzi at 9.2% depreciation, and then B 7%, and Sanlam Kenya at 6.25% decline in shares. Safaricom traded the highest volume, almost at 11.3 million shares. That he was followed by Equity Group Holdings, who traded about 2.03 million. Standard Chartered Bank, who traded about 938,000 shares. Kenya Power and Lighting Company traded about 356,700 shares. Regarding the Nairobi Stock Exchange market indices, the benchmark index, that is the Nairobi All Share Index, moved up by about 0.62%, up to 0.82, and that is about 0.82 points. Moved those at points of about 133.01, representing a 1 week gain of 8.29% and a 4 week gain of about 2.3%, while looking at an overall year-to-date loss of 20.09%. Other remarkable indices that performed were Stock Exchange 20 share index at about 114.8 points, and a couple of losses and gains here and there as well. Well, briefly summary for the Stock Exchange. remember, you trade across borders, either way, from either investing in the cross-listed equities, or you can actually help, the stockbroker could help you trade other exchanges as well. Some stockbrokers do that, because if you look at SBG, for example, Standard Bank Group, stock brokerage firm, it's a company that is present in most East African countries, but also present in South Africa, in other countries of West Africa, and so many other countries around Africa. They can help you as well to trade across the borders. So that's why it's important for you to have information regarding the performance of some of these stocks, looking into what they can offer as opportunities. We're going into another very quick breather. When we return, we give you our top stories. Did you know that Zimbabwe actually is looking to trade in as currency? We'll be right back with that story.